Gold is being quietly repriced, and most people have not yet noticed the shift. It's currently standing above $4,200 an ounce. There isn't a sudden move driven by headlines. It's something far more structural, and the signs are already visible if you know where to look. For years, gold has been undervalued relative to the level of global risk in the financial system. But today, the forces that once suppressed its true worth are beginning to weaken, while new pressures are pushing its value higher. So let's look calmly at why this silent repricing is happening now. The first major factor is the rise of global debt. Governments, banks, and households are carrying record levels of borrowing. And as confidence in debt weakens, confidence naturally shifts towards assets that do not rely on someone else's promise. Gold stands outside the credit system, and that matters more today than it did even 5 years ago. The second factor is inflation, not the headline rate, but the structural kind that sits beneath the surface. Even as central banks have raised rates and started to lower them again, the long-term pressures remain. High energy costs, supply chain adjustments, aging populations, labor shortages, and the cost of reshoring industries. These forces quietly reduce the purchasing power of currencies over time. Gold has historically responded to this, and it's responding again. Another important shift is central bank behaviour. Around the world, central banks are buying gold at levels not seen in more than half a century. They aren't doing this for decoration. They're doing it because they understand that the global monetary landscape is changing, and that gold acts as an anchor when the value of money becomes uncertain. When the institutions that create currency buy gold, that is a signal. Liquidity is also playing a role. In stressed markets, liquidity dries up quickly. Investors look for assets that can hold value independently of financial intermediaries. Gold fits that need. It doesn't rely on a bank staying solvent or a government maintaining confidence. There is also a psychological shift underway. People sense that we are entering a different economic era, one defined by higher borrowing costs, slower growth, and more frequent shocks. And when confidence weakens, money moves quietly into safer ground. This shift rarely starts loudly. It begins in the background and becomes clearer later. Silver is experiencing a similar but quieter shift. Although it behaves differently to gold, the same underlying forces, rising debt, currency pressure, changing central bank behavior, and weakening confidence, are influencing silver's long-term value. We will explore this in an upcoming video because silver often moves later than gold, but when it does move, it can sometimes move much faster. All of these forces together have created the conditions for gold to be repriced. Not in a dramatic overnight spike, but as a steady repositioning of value relative to risk. And that process is still in its early stages. None of this is a prediction. It is simply an observation of the data, the policy decisions, and the behavior of institutions from around the world. Now, if you found this analysis helpful, please like and subscribe to this channel. It really does help the algorithms. And if you want to understand how this fits into the bigger picture, watch my video on the new global money system. Thank you for watching, and I'll see you in the next video.